Could Bitcoin crash as low as 22,000? In today's video, we're going to be arguing the bearish case scenario, discussing from a technical and structural perspective exactly what needs to occur to facilitate such a move. Let's go ahead and jump into the video. Okay guys, welcome back to the channel. Thank you for tuning in. I hope you're all having a fantastic day today. In today's video, we're going to be discussing the bearish case scenario, discussing exactly what needs to occur from a technical and structural perspective for the price to enter a high time frame downtrend. We're also going to be going over the smaller time frame and specific warning signs that are popping up on the charts. We'll also review the overall current uptrend, discussing what the bulls need to do to reclaim strength and avoid a potential correction. Before we get into it, smash the like button, hit the comment button, and subscribe to the channel. We post daily videos for Bitcoin focusing on the facts, data, technical and structural information, relevant news events, and economic news. No hype, no BS, no emotion, pure raw TA. If that is the kind of content you are interested in, do yourself a favor, head down to the pinned comment, click the second link to get access to our Telegram channel. You'll get charts, updates, videos, educational posts, news events, and everything you need to stay in the loop with cryptocurrency, Bitcoin, and of course, the relevant economic data. If you are interested in joining our VIP channel, we post trade signals with exact entries, exact targets, exact stop losses. We give you trade justification, and we give you exclusive analysis and so much more. You'll also get access to our trading chart and education chat, including a variety of different other group chats. As you can see in here, guys, we are all trading, we are learning, developing our skills. I'm sharing information, sharing trades, and teaching you guys how to become better traders. If you are interested in developing your trading skills, learning from a professional, and being around a like-minded community who are focused on getting better, not shilling, not creating hype and FOMO, but actually learning how to trade, go ahead and contact me to do so. It is a link up in the free channel. All information over here. Let's dive in. Starting off today, guys, with the market data. So, how are we looking currently for the 24-hour period? Volume is down 13.48%. It is the top left-hand corner of the screen over there, sitting at 68 billion. As for 24-hour liquidations, we have slumped a bit, down 32%, but still sitting relatively high at 64 million. Looking at the overall month-on-month returns, we can see August is currently down 0.31%. Moving over to these liquidations of the 64 million, the vast majority came from longs. An absolutely huge long liquidation on the correction back down to 29,000. What an insane correction, guys. We discussed this in yesterday's video, telling you guys that this whole move had every single indication of a bull trap. We even said in yesterday's video, our personal opinion, this was a bull trap, and we told you we expected a strong correction towards 29,325 as our first target. We ended up going even lower. Absolutely brutal, guys. A lot of people liquidated, a lot of longs destroyed on that correction. And this is why I always tell you, when you are trading on irrational exuberance, when you are trading late news, when you're trading these news events, you are generally going to be used as exit liquidity, as the people pushing these news events are using you for exit liquidity. They're not here extending a helping hand, trying to make you money. They're not saying, I'm buying into this to help you and give you an upper hand. They're trying to manipulate your movements. They're trying to get you to put your money in certain places at certain times so they can know what you're doing. If they know what you're going to do, they can counter it. You have to think of it like a game of chess. You have to be one step ahead, because they will do everything they can to make sure you are one step behind. Do not fall for it. And a lot of people fell for it. The data suggested it, yet the price went down. So huge correction toward the downside, huge liquidation. Thankfully, we were on top of it. If you followed the channel, you would have caught that move. You would have avoided that false break. Let's go ahead and move over to the overall volatility index now. Moving on to the 30-day period. The 30-day period volatility, as we know, is at the lowest point since all the way back in July 2020, sitting at around 1.3%, and we're currently sitting at around 1.31%. absolute lows over here, guys. Volatility index still pushing sideways and down while the price is moving down. This is a sign of weakness. This is our first sign of weakness we're discussing today. This is a bearish sign. Moving to the 60-day, we can see on the 60-day, it is really not all that much better if it even loads. If we do load it, it is really not all that much better on the 60-day. We are still plateauing just as we are on the 30-day period. Moving over to the DXY, the DXY has seen an aggressive move toward the upside, actually coming very close to retesting this downward trending resistance line. We're very likely to move up and actually retest that trend line today. If we break out, this will signify a shift in strength towards the bears. Okay, this will be very, very bearish for the markets. If we reject and push down, this will be bullish. If we do want to see the bulls take control again, we do need to start losing some of these lower support levels. But as a overall general guide, the DXY is moving up. The markets are under pressure. They're under selling pressure. They may not necessarily move down immediately, but that selling pressure could potentially drive it down over a high time frame. Remember, the correlation is 0.7. It's a 0.7 negative correlation between the movements on the DXY and the movements for traditional assets, including Bitcoin. So we're not expecting the intraday movements to be exact, but if the DXY continues up over an extended period of time frame, within that extended period of time frame, Bitcoin cryptocurrency and stocks alike are more likely to also continue in a downward trajectory as opposition due to that negative correlation. Moving on to the stock market, we can see a little bit of a slump yesterday, correcting from that uptrending resistance back toward the downside. Again, we do have some momentary support over here, sitting at 4,500. I would expect a lot of blood on the S&P 500 if 4,500 is lost. This is a very key level. It's not only a key horizontal support level, but it is a key psychological level on the chart. If lost, we can expect a move towards a 50 EMA and potentially, if lost, even lower to retest this major chunk of support at around 4,300. Again, for the bulls to take control, we need to invalidate these high points and start breaking above this uptrending diagonal and push higher. Very difficult to do if the DXY is climbing upwards. The same goes to the Dow Jones, guys. We do need to break above these local high points over here to continue upwards. Until then, we are in a uptrend, and I want to keep everyone very informed. We are in a overall uptrend, yet we are at the top range of the uptrend, and this is again a parallel channel. It is a horizontal rising channel, and therefore the risk return over here, although the overall trend could continue upwards when it comes down, the risk return in favor are in favor of short. So same goes for the Dow Jones. But let's go ahead and get into Bitcoin, guys, and we have a lot to discuss. I wanted to briefly interrupt today's video to discuss my favorite exchange, Bitget. If you're looking for a safe, honest, reliable, and accurate exchange, look no further than Bitget. You can sign up by the link in the description to support the channel and get access to 3 exclusive perks. That being up to $5,005 in trading rewards, up to 15% discount on your trading fees, and exclusive access to our MegaWhale promotion campaigns that we run every few months. Alongside that, guys, Bitget is a non-KYC exchange, meaning you do not have to KYC. It is completely optional. Bitget also has a protection fund that secures user assets against external hacks and threats in the space. Alongside that, guys, Bitget offers up to 125x leverage on futures with extensive amount of trading pairs and liquidity on the market. I highly recommend signing up to Bitget. It is the exchange I've been using for over a year and a half now, including all of our members. If you're interested in signing up, trading there, and supporting the channel, you can do so with the link in the description. Thanks for listening. So first and foremost, we need to talk about what we said at the intro. We talked about 20,000. We've said, what are the chances of 22,000? And why is 22,000 important? So what we're seeing over here is our current daily and weekly chart. This is our weekly trend. This is the uptrend, right? We have been in ever since we established the breakout of our falling wedge structure, which was the extensionary structure out of the bear market. So we go ahead and zoom out, right? We go ahead and zoom out. We had our bear market downtrend. This was our bear market downtrending resistance. I'm going to go ahead and change that to a black line. Our bear market downtrending resistance, the reason we do not use this point, as this was the second point of the bearish divergence. We had the bearish divergence over here. We had the first high, which is going to represent this point here. And we had our second low, which is our bearish divergence. We do not include this as a high point. This is deviation from the trend. So we have our next resistance. And if we move down, we have our final resistance on that bear market. Upon the end of the bear market, we had a consolidation phase. This was our falling wedge structure. This represented decreasing momentum, volatility, volume, and momentum coming out of a downtrend, which is bullish consolidation. It is bullish compression. We saw a breakout of that bearish structure. It flipped momentum at this point over here, and we confirmed the trend upon the retest of 20,000, continuing towards the upside, being in that same uptrend ever since. That is the uptrend we have been in for the entirety of 2023. This uptrending trend line is a significant point on the chart, as it represents a point of which the trend will flip from up to down on the high time frame. Now, of course, a small time frame, we can have downtrends starting sooner. We've been in a downtrend on the daily chart for quite some time, but on the high time frame, in the weekly chart, we are technically still within an overall uptrend. It's very important we understand this going into today's video. I do not want people to get the wrong impression about this video. We are in an uptrend. The charts on the monthly, the charts on the weekly are technically still bullish, but we are starting to see a lot of bearish signs pop up. A lot of weakness pop up, and as we start to see this, we have to be aware, we have to be prepared in case these signs of weakness start to develop on a higher time frame and start to lose some key structural levels, which could facilitate an extended correction toward the downside. As you know, I bought Bitcoin at 18,000, I bought Bitcoin at 16,500. I sold at 30,000. I re-entered some longs. I didn't rebuy my same position. I re-entered longs over here, and I sold once more at 31,400. At 31,400, we entered a huge short on Bitcoin. Take a look at this short we did over here. 31,400, we entered a massive short targeting 28.4. We are still in that position. We still expect that. So you can be weekly bullish, as we are, and daily bearish at the same time. The time frame is relevant. So if we are looking at that 22K level, how do we come to that level? First and foremost, the 22K level is taken from the measured move of the potential, and I say potential breakdown of the width of a height between the current price action and, of course, the height of this level over here. If we have a structural breakdown, that will validate a structure called a head and shoulder pattern, right? We have a head and shoulder pattern over here, which is a bearish structure. We take the distance between the peak of the head towards the trend line, apply it to the breakdown point. It takes us towards our target. The target actually sits between these 2 points, and therefore we're going to go ahead and be more conservative and say we're looking at 22K. If we see a breakdown, that would be the measured move of this target. So that is where we come to that number from. That is a real possibility, but it is not a reality as of yet. It will become a reality if the price loses this uptrend, then that move comes in play. So the next question is, how can we identify when that trend will be lost, and what can we use to infer the probabilities of that trend being lost prior to actually being lost? That is when we bring up some of our technical levels, specifically our RSI, specifically our momentum. We know momentum drives price. We know momentum is a metric of price, just as volume and volatility are momentums of are metrics of price. We know the strength of price action is a combination of these metrics, and we know the strength of price action can help us identify the probable direction of price action based on where the price is in regards to supply and demand. So if we're looking at the strength of price action to determine the probabilities of moves, we have to look at particular points from a technical perspective where the strength shifts from strong bullish, okay, to weak bullish, and from strong to weak. Okay, so we have strong bullish to weak bullish, and from bullish to bearish. We have to look at those points where the strength actually shift, because then that shifts the probabilities of certain moves. So we're looking at the RSI. If we fail to hold above this uptrending level on the RSI and we break below it, that will be a very strong indication we are highly likely going to at least move down to retest this level, or potentially even break down from that level itself. So very important. Now let's go ahead and zoom out a little bit more to this chart. What else is really warning us that the strength of the bears are really kicking in? We have to go to a macro chart. We're going to go ahead and take a look at our weekly chart over here. Let's go ahead and bring up the weekly chart for Bitcoin. We'll go ahead and do that in 1 second. Weekly chart for Bitcoin, here it is. We're going to go ahead and take a look at this chart, which is our Gaussian channel. Technically, from this perspective, the weekly trend is still intact from a technical level. If the weekly price action falls below the upper band of the Gaussian channel, which is going to be 28.4K, if the price action falls below the upper band of the Gaussian channel, this would be an incredibly bearish sign for Bitcoin and will most likely result in deviation above and a full-blown correction to at least the midline of the Gaussian channel to fill this gap in the VRPV that is around 25.2K. Now, why is 25.2K significant? If we go back to this chart, 25.2K is this major level of structural support on a chart. In fact, this level of structural support is a 400 day long support level. Here is the thing. We retested this level once while momentum was positive, while we were above the overall uptrend. If we retest it again, we would be in a downtrend, meaning we would be entering support with negative strength. This increases the probability of a correction below it. Where would the next support be? It is over here. So we are looking for these key trigger points because the key trigger points will shift the probabilities of specific moves. From a macro chart, we are still bullish. And I want to make sure everyone knows, we are still bullish. The bulls on the macro chart still have strength. They still have control. They can still push the price up, but they are losing that strength and they are about to lose it if the price goes much lower than 28.4. If the price drops below 28.4, the bulls are forfeiting a lot of strength and the probabilities of a continuation upwards start to diminish. Remember, trading is a game of probabilities. Let's take a look at another indicator. If we take a look at the RSI, which is going to be our relative strength index, it is a reflection of momentum. It is a derivative of price action itself. The overall RSI, the closes are based on the candlestick, the candle body closes, not the overall candlesticks. Let's go ahead and get rid of this for a second. Now, the RSI is a phenomenal tool at suggesting how overbought or how oversold an asset is. But here is the thing. This is not really how we're going to use the RSI, as we believe using an indicator how the general public or everyone else uses it will give you pretty poor results. We use the RSI not to predict when an asset is oversold or overbought, when it is positive or negative. We use the RSI to indicate when we see shifts from strong bullish, like we said before, strong bullish or positive bullish to negative bullish momentum. We can have bullish momentum that is strong and we can have bullish momentum that is negative. These shifts can increase the probabilities of certain moves based on where the liquidity levels are. If we see a shift from strong bullish momentum to negative bullish momentum while the price is at resistance, which we saw over here, it increases the probability of a rejection, although the overall trend is still up. So we can see shifts in momentum that do not directly impact the high time frame trend, but shift the probabilities of specific short-term corrections, continuations, or moves. So looking at the RSI over here, if we take a look at the 62.09 on RSI, every single time we have seen a correction below that point from the top side down, we see a correction in Bitcoin. If we go back and mark out a few of these, and we can go back in history and mark out all of these scenarios, guys, there's been about 11 of these scenarios in the past couple years. In the last 7 or so years, we've seen around 11 of these scenarios. And every single time, and I'm talking every time we have seen this, we see a correction. This is just in the last 5 years, 5.5 years, okay? We've seen 1, 2, 3, 4, 5, 6, 7 scenarios. Every single time we've seen this, it has resulted in a drop for Bitcoin. We saw a correction, okay? Over here, we saw the price move down around 70%. We saw a correction over here, around a 40% correction. We saw a 20% correction here. We saw a 40% correction here. We saw a 70% correction here. So a 20% correction here. We have already seen an 11% correction. And this is very important, as the drop of a shift negative in RSI indicates the probability of a continuation downwards has increased, and therefore the probability of a retest of this uptrend prior to a breakout has shifted in favor of the retest. Now, like we said already, if we retest this level, we will have lost the Gaussian channel upper band on the weekly chart, which increases the chance of a drop towards this level. And if we retest this level, we have an increased chance of dropping over here as the momentum would be negative, retesting a support level in an overall downtrend. Do you see how the dominoes start to knock over one by one by one? And as they start knocking over, the strength of the bears start to gradually increase. So this is all the weekly chart. Let's take a little small time frame, because we already know for any of this to start happening, we need to see weakness on the small time frame, right? We need to see the weakness on the small time frame. The small time frame becomes bullish again. None of this will occur. So two things. When will the small time frame become bullish? What are we looking for the bulls to reclaim control? And how can the price move lower? So let's start with the how can the bulls reclaim control. We already know for the bulls to reclaim control and push the price upwards on a macro scale, we need the price to break above 32,000. Okay, if the price breaks above 32,000, that will send the price upwards on a macro scale. In fact, it will send the price upwards aggressively on the macro scale. If we look at this liquidity level over here, we have a huge increase of volatility toward the downside. What we see on one side, we see on the other side. We generally see that replay on the flip side. Taking a look at the price action, if we break above 32,000, we're entering this low resistance range over here where volatility will increase, resistance will decrease. Okay, and we'll have positive momentum moving through. If we have positive momentum moving through a resistance, we have increased volatility, and the price action will move upwards towards the next resistance at 38,000. So if we break above 32, the price goes up. That has been a fact. Everyone knows it. There's no point discussing it too much, because that is an absolute fact of the charts we've been talking about for a very long time. Moving on, if we want to see the bulls reclaim control, and by reclaim control, I mean increase the price up to this level, flip the probabilities in favor of a move up to this level, we need to see 30,400 to 30,250 cleared. That is our POC level. If we take a look at the POC peaks, if we take a look at the VRPV, what does it tell us? It tells us from this POC level upwards, we have decreasing resistance. That results in an easier move toward the upside. It increases the probabilities of a continuation upwards, as there are less historical sellers or less historical orders within this range. If we take a look at the POC here, we have decreasing VRPV. That suggests we have increasing resistance toward the upside. The POC being the point of control, but also the point of which the orders on the bottom and top side flip from less to more, a very important trigger point for the bulls. If we take a look at the current price action, we can see the 29,325 level we discussed yesterday is the peak point. So for the bulls to reclaim control on the immediate small time frame and push the price up on the immediate small time frame, that similar level, that same level we actually lost and rejected from and retested, needs to be reclaimed. Let's take a look on the hourly. The price needs to get above this red line for the bulls to reclaim and push upwards. Until then, we have falling VRPV, we have dropping momentum, we have dropping volatility, we have dropping strength, and we have selling pressure. The price is more likely to continue downwards to 28.4. If we lose 28.4, that is the upper band of the Gaussian channel. You already know what happens. We enter a daily bearish trend, okay? That is incredibly bad. This enters, a weekly bearish trend. This is incredibly bad. So 28.4 is, of course, our next target. We still expect 28.4. If that level is lost, that becomes a very, very big bad sign. We actually want to see 28.4 defended. I don't know anyone who wants Bitcoin to drop to 20K besides people who didn't get in. Who wants it to drop? It's not a good thing. Keep it up. Keep it pumping. Everyone wants the prices to go up. It's better for crypto, better for volatility, better for everything, but we have to focus on the facts. Emotions and what we want doesn't matter. The charts really doesn't care what we want it to see. The charts really don't care what we want or what conditions we want. We have to just trust the charts, focus on the charts, and go with what the price is doing. Follow the money. And what we are saying here, 28.4, key support. If we lose that, very bearish. But this will be the last line of defense, in my opinion, based on what we've gone over today, for the bulls to keep the weekly strength in check. If this level is lost, the bulls are definitely in absolute trouble. Until then, guys, watch the short term. We are starting to see weakness develop. Let's break it down. 15-minute chart. Bring up some of our technical indicators. All right, already what we're seeing, guys. Already what we are seeing. We're seeing rejections, okay? We had this overall uptrend over here. We have this rejection at this point over here. We can see the CVD increased, but the CVD did not increase enough past our prior peak. We want to take out these high points on the CVD to signify a shift in overall volume. Looking at the open interest, it is still falling. Looking at the RSI, we have this overall downtrend, right? We have this overall downtrend in RSI, and on a smaller time frame, we have shifted negative in momentum. So we have negative momentum, we have weakening volume, we have obviously selling orders coming through with the price entering a low volatility range, and it definitely has that chance to move toward the downside. The bulls need to push back above here to see any strength to push back upwards. Until then, expect short-term corrections, expect a correction toward the downside. Thanks for watching. I hope you enjoyed, and I'll catch you guys in the next video. Be sure to check out the Crypto Academy. It is our 10-unit course. We teach you guys how to trade. If you want more information, check out the website. Links down below. Thanks.